Welcome to Trading Lounge and the gold silver report for the 24th of February. With the gold here, we can see that the move down in this is a weekly chart. So the last week that moved down through here was on higher volume than the previous trend, the previous bar. So that's a bearish signal. And then the rally that we're seeing at the moment is on much lower volume. So that's divergence between those two there. Of course, it's not the end of the week yet. It's only Wednesday here in Australia, Wednesday morning. But we'll keep an eye on the volume here, because if it was going to, continue to push up, then we'd want to see an increase in that volume as well to confirm the price action. So with this chart at the moment, the market can come lower into this space, and I've always had two counts for this. One count that I've got that the low is in place and will continue to move up, and the other one is that we have a move lower. So let's go in and have a look at those two counts. So one of them is that we have a low in place here at the moment, and we'll go in and take a closer look at that. And the other count is that we got one more move to come in down here before moving up in that space. So let's go in and take a look at both of those. So the first one this one here, this will do the trick. So this one here is just a WXY here, but wave 1 here, wave 2 here, an A and a B and a C here. For wave 3, so ending triangle, diagonal triangle, and then wave 4 and then wave 5 coming down here. So that's a valid move, so we need to keep an eye on that. And the other move that we've got here is on this chart here, with it playing out like this here, with wave A here, A, B, C for the B wave, and then 5 waves down for the C wave here, and having a low in place. And if that's the case, we would be looking for an impulse wave to the upside here, and then we'd be looking for an ABC coming back again, and then pushing off up there. So in terms of a trade setup, we'd be looking for something over this side over here for this. So we'd want to see that impulse wave complete, and we'd also want to see this pull back, and then we'll take the top of the B wave out, because this will be an ABC pattern here, and we can view that maybe on this chart. So with this chart here, just following on from yesterday, so looking at 1 and 2, nice strong third wave up here, fourth wave, and a fifth wave here. So we need that fifth wave in, and then the ABC pattern. So we'll pick this up tomorrow, and we'll just continue to work through it until we can figure out where our long trade is going to be. But like I mentioned to you, we're not really seeing confirmation in volume just yet for this. The real volume will come in on the third wave coming into this space. But yeah, it's nice to see, for a change in trend, you'd want to see, well, probably 20-25% increased volume over the whole correction if you divide the volume by the amount of days. But that's another calculation which I don't have on this particular platform, but it is on the Trading Levels charting program, that one which I had designed for myself. But anyway, long story short, we need volume to confirm the price action. We're not seeing that yet, so it's quite possible that we can have that other load come into place here. So we just need to be a little bit mindful, that's all. Okay, with the DXY, the dollar index, we'll just monitoring this. So as you may know, we've been looking down here. This is a 1 hour chart, so looking at wave 3 here, then our A and our B for the triangle, and up for wave C here for wave 4, and then we counted down here. We had a short trade in there in case anybody wanted that, but 1 and 2 and 3 and 4, and down for 5 here. So that's playing out quite nicely there. And then we've had our rally back to our 50-60% retracement level area, and now we're looking at this wave 3 coming in from 2 down to 3 here, so that's sort of playing out. So while this is moving down through here, obviously we're at 90 at the moment, so that's a medium level, halfway between two major levels. And yeah, we've got support here, but once that has its little rally here and then drops back, because that looks like a bit impulsive there, I'll just drop this into, just drop it into 5 minutes and just check on that. A little bit dodgy, but 1 and 2 and 3 and 4 and 5 here, a little bit dodgy like I said, but kind of works out okay. Just see how that sits on the support there. I would expect a bit more of a bounce to come into play on this. I just got to check. Doesn't look like a nice 5-wave structure here. I can see we've got 1 and 2 and 3 here. I wonder if we look at this as 1, 2, 3, 4 and 5 here. I suppose we have to, but that overlaps over here a little bit. So, but that's the only way I can get 5 waves out of this space here. So it could just continue to drop here as well. So this counter wave 1 and pulling back for wave 2 here may not be the case. We might just see this continue to cascade lower in this instance. So yeah, just be mindful of that. It may not come back up to the 50-60% for wave 2 there. But the takeaway with all of this though is that you know, this is a bearish scenario, and it's bearish because this is in 3 waves here. So that low needs to be taken out. Now it's possible that this wave 4 could get more complicated in that we have all of this as a wave A up here, and all of this is a wave B here, and then we have a wave C over here with 5 waves up, and that would push gold down there for that, in that last leg for gold. So that's possible, but yeah, we'll just leave it there for the time being. We're certainly seeing this is just the bonds here, just the US government bonds here. So the rates, I'll just get this into perspective here. It's just a 1 hour chart. Still not familiar with this charting program, but maybe I'll just put it on the 4 hour, see if I can squash it in here. So yeah, so as we talked about before, it's possible to have this as wave 1 here or wave A here for this. I'm not that sure just yet with this, bit of a new market for me, but definitely got the low in here. So we've got either got wave 1 here and ABC for B, or wave 2 in this instance. And then we're just tracking this move up here for wave C or wave 3. Okay, so once we get to the end here, then we'll work out if we've got wave C or wave 3 at the end here. If it's wave 3, well then we'll see a correction back here, but it could just top out here and push back down. You know, as people have mentioned online, that the Feds weren't expecting it to move up this quickly, so they'll probably cap it. But with that in mind, I can still see that we're going to be pushing up to 1.5 here. I don't think it's really going to, I mean, obviously it can affect stocks and that, but I think, and gold and so on, but I think it needs to be much higher than that, not at 1.5. It would have to be up at 2.5 or something, you know, to start impinging on that a little bit. But anyway, we'll just keep tracking. I know there's a bit of a messy count here, and I can count it in a couple of different ways. So from wave 2 here or B here, I can count at 1 and 2 here, and then wave 3 here and 4 here, and then counting 5 waves up here as an extension, which is probably wrong. So having wave 1 here and 2 here, and then green wave 1 and green wave 2 here, and then viewing this as the third wave will probably be the case as well. So I need to build my case on this, but I can tell you it's still got further to go, and that we will be seeing a bit of a dance at the 1.5 here for those rates. Right, let's have a look at silver now. So with silver, I've been working two counts, as you know, one bullish and one bearish. So I think today we'll have a look at both of them. So this is the first one. Now, I can look at the top up here as wave 3 and a correction for wave 4, or we could look at it as wave A here and wave B coming into play here for this. So it could be corrective to the upside. I just need to put it there and then we can rule it out later. If this is the bearish correction here of an A wave here, an A and a B and a C wave here for the B wave, then we'll be seeing further downside to come here for this. Now you might say that there's no case for that, and that's fine too, but I'm just explaining Elliott wave patterns. So yeah, it could come down in finish in 3 or finish in 5, but finishing in 5 waves of 1 and 2 here, and 3, 4 and 5 coming down to these previous lows here. Yeah, so that's that. And that's pulled back up to the 50-60% retracement level there as well. So we can just take a quick look at that roughly from there. So that's right in the 50-60% retracement level there. And that brings us into, well, you know, the 2,800, the $28 rather. I always see 8 as a profit-taking number. So you would always see the bids being hit here at this, in the natural flow of things. So really that's just a reaction from that level. So we can actually just put that in there. It's not a big deal. And that's all part of group 2 there. So 2650 here would be group 2. So the major level here, the next major level down is the 2000. Halfway between two major levels is the medium level, and then you've got the minor levels. So the minor levels will be 1, 2, and 3 here. And then, well, 5 is the midpoint, and then we've got 8 here. So it's a Fibonacci numbers 1, 2, 3, 5, and 8. That's all you really need to do to start. And then you just, once you sort of understand that, your attention gets drawn to the price much more, and then you start to notice that, you know, how the price works across those levels, and, you know, certain numbers carry different weights and so on. Righty, so that's the bear case there, and we can have a closer look at that. The bullish case, just get a bit more data in. Is wave 3 over here with an A wave here, a B wave here, and then 1, 2, 3, triangle A, B, C, D, E for 4, and then down for 5 here. And I kind of like this, I have to say. This move up through here counts as 5 waves, then the retracement back, then up for 1 here. So wave 4 here, up for 1, back for 2, up for 1, back for 2, and then looking at this as up for 1 here, an A and a B and a C back for wave 2 here, and then just pushing higher from that point. Just pushing, you know, just moving up higher. But we have to get support. To go long here, we need to get support on the 2800. So we need a classic trading levels pattern sitting on that 2800. So we've had a sharp right above it, but it came back and it hasn't fallen there. So we still need to see the arrival, the reaction, first high above the level, and then eventually finding support, and then we can go long from that point. But until we get that, we can't go long here. So yeah, that's the long side really there. So we need to see the arrival, the reaction, the first high above the level. So we're kind of chipping away at it, but we're not there yet. You know, we can take these highs here, but we're not there yet. And this is the point where it can fail as well. So we can look at this here. If I go to the 1 hour chart, well, this has got both counts on it, I guess. So down for 1 here, and this one here, copy this one, back here as well for that. So a C wave in here. So basically wave 1 here with an A and a B and a C wave here for wave 2 or wave B here, doesn't matter. And then we move down lower from that point. So yeah, so anyway, we're expecting it to pull back. So that's all good there. So we'll pick this. So in a few days, we'll have either support on the 28, we can go long, or we'll be much further down at that point. So we'll see how we go from that point. But getting there, slowly getting to a point where it will reveal itself, and then we can move in with the flow at that point. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.